Have you ever wondered why some people seem to win at everything while others struggle their entire lives? Why Warren Buffett can turn a few $1,000s into billions while others work 40 years and retire broke? The answer isn't luck, connections, or even intelligence. It's strategy. And the greatest strategic manual ever written wasn't created for business or wealth building. It was written over 2,500 years ago by a Chinese general named Sun Tzu. The art of war has secretly guided the most successful people throughout history. From Napoleon Bonaparte, who carried it into battle, to corporate titans like Jeff Bezos and Bill Gates who apply its principles in boardrooms. Today, you're going to discover exactly how they do it, and more importantly, how you can too. Chapter 1. Why most people never win. The fundamental misunderstanding. Let's start with a hard truth. Most people approach life like they're playing checkers while the wealthy and powerful are playing chess. They see the surface moves, but miss the deeper strategy underneath. Sun Tzu taught us that every battle is won or lost before it's ever fought. This principle explains why 80% of new businesses fail within 5 years, why most people live paycheck to paycheck, and why the same families stay wealthy for generations. Consider Sam Walton, the founder of Walmart. Before he opened his first store, he spent years studying his competitors. He didn't just look at what they were selling or how much they charged. He analyzed their supply chains, their employee structures, their weaknesses, and their blind spots. Sun Tzu wrote, "If you know the enemy and know yourself, you need not fear the result of 100 battles." Walton knew both himself and his competition so thoroughly that Walmart's dominance was inevitable before the first customer walked through his doors. Most people do the opposite. They start businesses without understanding their market. They invest money without studying the companies. They chase trends instead of understanding principles. They're fighting battles they've already lost because they never took time to understand the battlefield. Chapter 2. Know yourself, the foundation of all power. Sun Tzu's first principle is self-knowledge. Know yourself, and you will win all battles. This isn't motivational fluff. It's tactical intelligence. The most successful people in history have been brutally honest about their strengths and weaknesses. Take Oprah Winfrey. She didn't become a billionaire by accident. Early in her career, she recognized something crucial about herself. She wasn't the most polished broadcaster, she wasn't the most traditionally beautiful, and she wasn't from a privileged background. But she had an extraordinary ability to connect with people on an emotional level. Instead of trying to compete in areas where she was weak, she built an empire around her strength. This is strategic thinking. While other talk show hosts tried to be everything to everyone, Oprah dominated by being authentically herself. She understood Sun Tzu's teaching. Supreme excellence consists of breaking the enemy's resistance without fighting. She didn't fight against her perceived disadvantages. She turned them into advantages. The wealthy understand this principle deeply. They don't spread themselves thin. They identify their core competency and dominate that space completely. Ray Dalio, founder of the world's largest hedge fund, built his fortune not by being the smartest person in the room, but by creating systems that could think better than any individual. He knew his limitation was human bias, so he built algorithms to remove emotion from investment decisions. Most people do the exact opposite. They try to be good at everything and end up being great at nothing. They chase every opportunity instead of mastering one domain. They fight on every front instead of choosing their battles wisely. Chapter 3. The Intelligence Network. Information is power. Sun Tzu devoted an entire chapter to spies and intelligence gathering. He understood that information asymmetry creates competitive advantage. The wealthy and powerful have always known this secret. They don't just consume information differently than average people. They create information networks that give them unfair advantages. Look at how George Soros operates in financial markets. He doesn't just analyze charts and financial statements. He maintains relationships with central bankers, government officials, and industry insiders across the globe. When he famously shorted the British pound in 1992, making over $1 billion in a single day, it wasn't a lucky guess. He had spent years building an intelligence network that told him exactly when the pound was vulnerable. This principle applies far beyond investing. Reed Hastings transformed Netflix from a DVD by-mail service into a streaming giant because he understood something others missed. While Blockbuster was focused on protecting their physical rental stores, Hastings was gathering intelligence about broadband adoption rates, content licensing costs, and changing consumer behaviors. He saw the future before his competitors because he was looking at different data. The average person gets their information from the same sources as everyone else. They watch the same news, read the same websites, and follow the same experts. The wealthy create private information channels. They join exclusive mastermind groups, hire private researchers, and pay for intelligence that's not available to the general public. This isn't about insider trading or unethical behavior. It's about understanding that in any competitive arena, the person with better information has a decisive advantage. Sun Tzu wrote, "All warfare is based on deception." The wealthy understand that markets, like battlefields, are full of misinformation. Those who can separate signal from noise win consistently. Chapter 4. Speed and Timing, the Advantage of Rapid Action. Rapidity is the essence of war, Sun Tzu taught. This principle separates winners from losers in every arena. While most people hesitate, analyze endlessly, or wait for perfect conditions, the successful act swiftly when opportunities arise. Consider how Jeff Bezos built Amazon. When the internet was still young and most retailers were skeptical about online sales, Bezos saw the potential immediately. He didn't wait for market research or competitor validation. He quit his high-paying job on Wall Street and started selling books from his garage. His speed to market gave Amazon a first-mover advantage that competitors are still trying to overcome decades later. This principle shows up everywhere in wealth creation. When the 2008 financial crisis hit, most people panicked and sold their investments at the worst possible time. But wealthy investors like Warren Buffett saw opportunity. Buffett invested billions in companies like Goldman Sachs and Bank of America when their stock prices were crashing. He understood Sun Tzu's teaching. In the midst of chaos, there is also opportunity. The key is preparation meeting opportunity. Successful people don't just move fast when opportunities arise. They prepare extensively so they can move fast when the time comes. They have capital ready to deploy, systems in place to scale quickly, and decision-making frameworks that allow rapid action. Most people do the opposite. They spend years planning but never execute. Or they execute without preparation and fail because they moved quickly in the wrong direction. Sun Tzu taught that speed without strategy is chaos, but strategy without speed is useless. Chapter 5. The Art of Positioning. Choose your battlefield. One of Sun Tzu's most powerful concepts is choosing where to fight. The clever combatant looks to the effect of combined energy and does not require too much from individuals. This means positioning yourself where your natural advantages are amplified and your weaknesses are irrelevant. Steve Jobs mastered this principle. When he returned to Apple in 1997, the company was nearly bankrupt. Instead of trying to compete with Microsoft and IBM on their terms, Jobs repositioned Apple entirely. He didn't try to build cheaper computers or match Microsoft's software library. He created an entirely new battlefield where design, user experience, and brand prestige mattered more than technical specifications or price. This strategic positioning allowed Apple to charge premium prices while competitors fought bloody price wars. By choosing his battlefield carefully, Jobs turned Apple into the world's most valuable company. The principle applies to personal wealth building too. Robert Kiyosaki, author of Rich Dad, Poor Dad, understood that he couldn't compete with traditional financial advisors on credentials or technical knowledge. Instead, he positioned himself in the financial education space, where his ability to simplify complex concepts and connect with average people became his greatest asset. Most people let others choose their battlefield. They compete in crowded markets on other people's terms. They accept the rules of the game instead of creating new games where they have natural advantages. The wealthy think differently. They either dominate existing markets through superior positioning or create entirely new markets where they set the rules. Chapter 6. The Power of Deception. What They Don't Want You to See. Sun Tzu wrote, "All warfare is based on deception. When able to fight, we must seem unable. When using our forces, we must seem inactive." This doesn't mean being dishonest. It means understanding that competitive advantage comes from asymmetric information and unpredictable moves. Elon Musk is a master of this principle. While traditional automakers were publicly dismissing electric vehicles as niche products, Musk was quietly building Tesla's manufacturing capabilities and securing battery supply chains. When Tesla finally revealed their production numbers, competitors were caught completely off guard. They had underestimated Tesla's capabilities because Musk allowed them to. This principle shows up in investing too. The most successful investors rarely telegraph their moves. Warren Buffett often buys stocks quietly over months or years before revealing his positions. By the time the market realizes what he's doing, he's already accumulated his desired position at favorable prices. The key is understanding that in competitive environments, showing your hand too early gives others time to counter your moves. Successful people often downplay their ambitions publicly while working intensively in private. They let competitors underestimate them while they build insurmountable advantages. Most people do the opposite. They announce their plans loudly, seek validation for their ideas, and give competitors roadmaps to counter their strategies. They mistake transparency for honesty and wonder why others always seem one step ahead. Chapter 7. Unity of Command, the Decision-Making Advantage. Sun Tzu emphasized the importance of clear leadership and rapid decision-making. In war, the way is to avoid what is strong and to strike at what is weak. This requires someone with the authority and vision to make quick strategic decisions without committees, consensus building, or bureaucratic delays. This principle explains why entrepreneurs often outmaneuver large corporations. When Reed Hastings decided to cannibalize Netflix's profitable DVD business to focus on streaming, he could make that decision quickly. His competitors at Blockbuster and other large media companies were paralyzed by internal politics, shareholder concerns, and committee decision-making processes. The wealthy understand this principle in their personal finances too. They don't make investment decisions by committee or spend months analyzing every purchase. They develop clear investment criteria, make decisions quickly, and move on. This allows them to capitalize on opportunities while others are still debating. Mark Cuban exemplifies this approach. When he sees an investment opportunity that meets his criteria, he can write a check immediately. While others are forming investor groups, conducting due diligence committees, or seeking outside opinions, Cuban has already secured the deal. Most people suffer from decision paralysis. They seek input from everyone, analyze options endlessly, and miss opportunities while waiting for perfect clarity. The wealthy understand that making good decisions quickly is better than making perfect decisions slowly. Chapter 8. The Economics of Force, Resource Allocation Mastery. Sun Tzu taught that winning battles isn't about having the most resources, but about concentrating resources at the decisive point. The supreme excellence is not to win 100 victories in 100 battles. The supreme excellence is to subdue the enemy without fighting. This principle revolutionizes how successful people think about money and energy. Instead of spreading resources across multiple fronts, they concentrate overwhelming force where it matters most. Look at how Amazon approached retail dominance. Instead of trying to be profitable in every category immediately, Bezos concentrated resources on customer acquisition and market share. He was willing to lose money for years while building an infrastructure that competitors couldn't match. When Amazon finally chose to become profitable, they could do so while maintaining their competitive advantages. Warren Buffett applies this principle to investing. Instead of diversifying across hundreds of stocks like most fund managers, he concentrates his investments in a small number of companies he understands completely. This focus allows him to truly understand his investments and commit significant resources when he finds exceptional opportunities. The wealthy also apply this to their time and energy. They say no to almost everything so they can say yes to the few things that matter most. While average people spread themselves across multiple projects, jobs, and obligations, the successful concentrate their efforts on their highest value activities. Most people do the opposite. They diversify their efforts so broadly that they never achieve mastery in anything. They work on 10 different projects instead of dominating one. They split their attention between dozens of priorities instead of focusing intensely on their most important objectives. Chapter 9. Adaptability, the Evolution Advantage. Sun Tzu wrote, "Water shapes its course according to the nature of the ground. The soldier works out his victory in relation to the foe he is facing." This principle of adaptability separates long-term winners from one-hit wonders. Consider how Netflix evolved. Hastings didn't build the company to be a DVD by-mail service forever. He built it to adapt to changing technology and consumer preferences. When streaming became possible, Netflix evolved. When content costs rose, they became content creators. When global expansion became necessary, they adapted their content strategy for different cultures. This adaptability principle applies to personal wealth building too. The richest people don't get locked into single strategies or asset classes. They evolve their approaches as conditions change. Ray Dalio built Bridgewater Associates by constantly adapting his investment principles based on changing market conditions and new information. The key is maintaining core principles while adapting tactics. Successful people have consistent philosophical frameworks but flexible implementation strategies. They understand that tactics that work in one environment may fail in another. Most people do the opposite. They either change direction constantly, chasing every new trend, or they stick rigidly to approaches that worked in the past but don't fit current conditions. They mistake consistency in tactics for consistency in principles. Chapter 10. The Psychological Dimension, Mind Games of the Wealthy. Sun Tzu understood that warfare is fundamentally psychological. The supreme excellence is to subdue the enemy without fighting. This means winning through superior psychology rather than direct confrontation. The wealthy have mastered this principle in negotiations, business dealings, and market positioning. When Warren Buffett negotiates acquisitions, he often wins not by offering the highest price, but by offering certainty and speed. He understands that business owners facing crisis value psychological comfort as much as financial returns. This shows up in how successful people handle competition too. Instead of engaging in price wars or direct attacks, they often make competitors irrelevant through superior positioning. Apple didn't beat Microsoft by making cheaper computers. They made the price comparison irrelevant by creating products people wanted regardless of cost. The psychological dimension extends to how the wealthy handle their own emotions too. They develop systems and frameworks that remove emotion from important decisions. They understand that fear and greed drive most market movements, so they profit by doing the opposite of what emotions suggest. George Soros famously talks about his animal spirits, his intuitive sense of market psychology. But this intuition is built on decades of studying how emotions drive market behavior. He profits by understanding mass psychology better than the masses understand themselves. Most people are controlled by their emotions rather than controlling them. They buy when everyone else is buying and sell when everyone else is selling. They make decisions based on how they feel rather than what makes strategic sense. Chapter 11. Building Alliances, the Network Effect. Sun Tzu taught that the best victories come from building alliances and turning enemies into allies. The supreme excellence is to subdue the enemy without fighting. This often means creating situations where cooperation serves everyone's interests better than competition. The wealthy understand this principle deeply. They don't try to defeat everyone. They create win-win situations that build long-term relationships and compounding advantages. Look at how Oprah built her media empire. Instead of competing directly with other media personalities, she created a platform that made others successful too. Authors who appeared on her show became bestsellers. Experts who joined her programs became celebrities in their own right. By making others wealthy and famous, she became indispensable to the entire industry. This principle applies to business partnerships too. The most successful entrepreneurs don't try to capture 100% of small opportunities. They give partners significant upside in exchange for access to their networks, expertise, or resources. This allows them to participate in much larger opportunities than they could access alone. The network effect compounds over time. People who help others succeed build reputations that attract even more successful people to their networks. This creates exponential growth and opportunities and resources available to them. Most people think in zero-sum terms. They try to win by making others lose. This approach limits their growth because it makes potential allies into enemies and reduces the overall size of opportunities they can access. Chapter 12. The Long Game, Strategic Patience. Sun Tzu emphasized the importance of seeing beyond immediate battles to ultimate victory. The clever combatant looks to the effect of combined energy and does not require too much from individuals. This means building systems and capabilities that create long-term advantage rather than focusing only on short-term wins. Jeff Bezos exemplifies this principle. Amazon operated at losses or minimal profits for over a decade while building infrastructure that would eventually dominate multiple industries. While competitors focused on quarterly earnings, Bezos was building capabilities that would be unmatched years later. This long-term thinking shows up in how the wealthy approach education and skill development too. They invest heavily in capabilities that won't pay off immediately but will create exponential returns over time. Warren Buffett spent decades studying businesses and developing his investment philosophy before achieving his greatest successes. The compound effect is crucial here. Small advantages compounded over time create insurmountable leads. The wealthy understand that getting slightly better results consistently over long periods produces dramatically different outcomes than average results. Most people are trapped in short-term thinking. They want immediate results from their efforts. They change strategies when they don't see quick returns. They compete in today's battles while winners are building tomorrow's advantages. Chapter 13. Information Warfare, the Data Advantage. Modern warfare is information warfare, and the same principle applies to business and wealth building. Sun Tzu wrote about the importance of spies and intelligence gathering. Today's equivalent is data and analytics capabilities. The most successful companies today are essentially data companies. Google doesn't just run search engines. They collect and analyze more data about human behavior than any organization in history. This data advantage allows them to predict trends, optimize systems, and create products that competitors can't match. Amazon's success isn't just about logistics or customer service. It's about data. They know more about consumer behavior, supply chain optimization, and market demand than any retailer in history. This information advantage allows them to make better decisions faster than competitors. Individual wealth builders can apply this principle too. Successful investors don't just follow the news everyone else reads. They create systems to gather and analyze information that others don't have access to. They track metrics that predict market movements before they become obvious to everyone else. The key is turning information into actionable intelligence. Raw data is worthless without the ability to analyze it and act on the insights. The wealthy invest heavily in systems and people that can turn information into competitive advantage. Most people are drowning in information but starving for intelligence. They consume massive amounts of data but don't have frameworks to turn that information into better decisions. Chapter 14. The Deception of Weakness, Hiding Your Strength. One of Sun Tzu's most counterintuitive teachings is the value of appearing weak when you're strong. When able to fight, we must seem unable. When using our forces, we must seem inactive. This allows you to act without triggering defensive responses from competitors. Warren Buffett mastered this principle early in his career. He often downplayed his capabilities and ambitions while quietly accumulating significant positions in undervalued companies. By the time competitors realized what he was doing, he had already secured his advantages. This principle applies to negotiations too. Successful people often let others feel like they're winning while securing the terms that matter most to them. They give up visible victories in exchange for structural advantages. The key is understanding the difference between appearing weak and actually being weak. True strategic deception requires underlying strength. You can only afford to appear vulnerable when you're actually in a position of strength. Most people do the opposite. They try to appear stronger than they actually are, which makes them vulnerable to those who can see through the facade. Or they reveal their strengths too early, giving competitors time to prepare countermeasures. Chapter 15. The Unity Principle, Aligning All Elements. Sun Tzu taught that victory comes from perfect coordination between all elements of your forces. In modern terms, this means aligning your resources, relationships, and strategies toward common objectives. The most successful people achieve this alignment across all areas of their lives. Their investment strategies support their business objectives. Their relationships reinforce their professional goals. Their time allocation reflects their stated priorities. Elon Musk demonstrates this principle clearly. His investments in SpaceX, Tesla, and SolarCity weren't random diversification. They were coordinated investments in sustainable energy and space exploration technologies. Each company's success reinforces the others and advances his larger vision. This alignment creates what Sun Tzu called combined energy. The effect of multiple forces working together is greater than the sum of their individual impacts. When all your resources and relationships point in the same direction, you can achieve results that seem impossible from the outside. Most people have fragmented strategies. Their investments don't support their business goals. Their relationships don't reinforce their professional objectives. Their daily activities don't align with their stated priorities. This fragmentation dissipates energy and prevents them from achieving their potential. Chapter 16. The Speed of Implementation, Execution Excellence. Sun Tzu emphasized that plans are worthless without flawless execution. The general who wins a battle makes many calculations in his temple before the battle is fought. But these calculations mean nothing without perfect implementation. The wealthy understand that the world rewards execution, not ideas. Everyone has good ideas. Very few people can execute those ideas effectively and consistently. This is why investors often bet on strong teams with average ideas rather than weak teams with brilliant ideas. Look at how Mark Zuckerberg built Facebook. The concept of social networking wasn't original. Friendster and MySpace existed before Facebook. But Zuckerberg's team executed better than their competitors. They moved faster, adapted quicker, and scaled more effectively. This principle applies to personal finance too. Everyone knows they should save money, invest for the long term, and avoid debt. The difference between wealthy and poor people isn't knowledge. It's consistent execution of proven principles. The key is building systems that make good execution automatic. Successful people don't rely on willpower or motivation. They create processes, habits, and accountability structures that ensure consistent implementation regardless of how they feel. Most people are great at planning, but terrible at execution. They spend more time talking about their goals than working toward them. They mistake activity for progress and planning for action. Chapter 17. The Compound Effect. Small advantages, massive results. Sun Tzu understood that small advantages, consistently applied, create decisive victories over time. The clever combatant looks to the effect of combined energy and does not require too much from individuals. This principle explains why some people become incredibly wealthy while others struggle despite working equally hard. Small differences in decision-making, compounded over time, create enormous differences in outcomes. Warren Buffett didn't become wealthy by making one brilliant investment. He became wealthy by making slightly better investment decisions consistently over 50 years. His annual returns aren't dramatically better than market averages, but compounded over decades, they created extraordinary wealth. The compound effect applies beyond investing too. People who read one book per month aren't dramatically smarter than those who read occasionally. But over 10 years, the knowledge gap becomes enormous. People who network consistently don't seem much more connected than others initially. But over time, their relationship advantages become decisive. The key is identifying activities that compound and focusing on them consistently. Not all activities create compound returns. Some efforts produce immediate results that don't build over time. Others create capabilities and relationships that become more valuable each year. Most people focus on activities that produce immediate gratification rather than long-term compounding. They chase quick wins instead of building sustainable advantages. Chapter 18. The Art of Retreat, Strategic Withdrawal. Sun Tzu taught that knowing when not to fight is as important as knowing how to fight. He who knows when to fight and when not to fight will be victorious. This principle saves resources for battles you can actually win. Successful people are excellent at cutting losses quickly. They don't throw good money after bad or persist with strategies that aren't working. Warren Buffett famously says his best decisions were often the stocks he didn't buy and the businesses he didn't acquire. This principle applies to time management too. The wealthy are ruthless about eliminating activities that don't serve their objectives. They say no to opportunities that seem good but don't align with their strategic priorities. The key is distinguishing between temporary setbacks and fundamental flaws. Successful people persist through short-term difficulties but abandon approaches that aren't working strategically. Most people do the opposite. They quit too early when facing temporary obstacles but persist too long with fundamentally flawed strategies. They lack the frameworks to distinguish between situations requiring persistence and situations requiring strategic withdrawal. Chapter 19. Creating Dependence, the Indispensability Strategy. Sun Tzu understood that the ultimate security comes from being indispensable to others. When people depend on you for something they value highly, you gain leverage and protection that can't be easily removed. The most successful people build careers and businesses around creating dependence. They develop skills, relationships, or resources that others need but can't easily replace. This creates sustainable competitive advantages that persist even when specific tactics become outdated. Look at how Bill Gates built Microsoft's dominance. He didn't just create software. He created an ecosystem where businesses became dependent on Microsoft's products. Once companies built their operations around Windows and Office, switching to competitors became prohibitively expensive and risky. This principle applies to individual career development too. The most successful professionals don't just perform their assigned tasks well. They become the go-to person for solving specific types of problems or managing particular types of relationships. This indispensability protects them during economic downturns and positions them for advancement opportunities. The key is creating value that's both important and difficult to replace. Many people work hard, but their efforts can be easily replicated by others. Successful people develop capabilities that are both valuable and scarce. Most people focus on being good employees rather than becoming indispensable resources. They develop skills that many others have rather than building unique combinations of capabilities that are hard to replicate. Chapter 20. The Inner Game. Mastering Yourself First. Sun Tzu's deepest teaching might be that victory begins with self-mastery. He who knows others is wise. He who knows himself is enlightened. You cannot consistently defeat external opponents if you haven't mastered your internal conflicts. The wealthy understand this principle profoundly. They develop sophisticated systems for managing their own psychology, emotions, and decision-making processes. They understand that their biggest enemy is often their own impulses, fears, and cognitive biases. Ray Dalio built the world's largest hedge fund partly by creating systems that counteract human psychological weaknesses. His principles methodology forces logical analysis of decisions and removes emotional reactions from investment choices. This self-mastery extends to daily habits and routines too. Successful people don't rely on motivation or willpower to maintain productive behaviors. They create environmental and systematic controls that make good decisions automatic and bad decisions difficult. The compound effect of small daily disciplines creates extraordinary results over time. People who control their mornings control their days. People who control their days control their lives. Most people are controlled by their impulses, emotions, and immediate circumstances rather than controlling them. They make important decisions based on how they feel rather than what serves their long-term interests. Are you still here? If you're still watching this, it means you're serious about changing your life. Comment "Warrior" below and let me know you're ready to stop being average and start winning. The next section is going to show you exactly how to implement these principles starting today. But first, I need to know you're committed to actually using this information instead of just consuming it. Chapter 21. The Implementation Framework, From Theory to Practice. Understanding Sun Tzu's principles is worthless without a systematic way to implement them. The wealthy don't just read about strategy, they create systems that force strategic thinking into their daily decision-making processes. Start with the foundation, brutal self-assessment. Most people overestimate their strengths and underestimate their weaknesses. Create a written inventory of your actual capabilities, resources, and limitations. Be as objective as if you were analyzing a competitor. Next, develop your intelligence network. Identify the 5 most successful people in your field and study everything about how they operate. What information do they track that others ignore? What relationships do they maintain that others don't? What systems do they use that others avoid? Create decision-making frameworks that remove emotion from important choices. Warren Buffett uses investment checklists that force him to evaluate opportunities consistently. You need similar frameworks for career decisions, relationship choices, and resource allocation. Build compound advantage systems. Identify activities that become more valuable over time and commit to consistent execution. This might be daily reading, weekly networking, monthly skill development, or annual strategic planning. Most importantly, create accountability structures that ensure consistent implementation. The wealthy often work with coaches, advisors, and peer groups that hold them accountable to their stated objectives. Chapter 22. The Relationship Battlefield. Networking is Warfare. Sun Tzu taught that alliances determine victory more than individual strength. In the modern world, your network is your net worth, but most people approach networking like amateurs rather than strategists. The wealthy don't network randomly at events hoping to meet useful people. They strategically identify key relationships that would advance their objectives and systematically build those connections over time. This requires giving value before asking for value. Instead of approaching successful people with requests, approach them with resources, insights, or opportunities that serve their interests. This reverses the typical power dynamic and makes you memorable for positive reasons. Study the relationship maps of successful people in your field. Who do they collaborate with? Who do they learn from? Who influences their decisions? These people should become targets for your networking efforts because they already have proven access to the level of success you want to achieve. The key is thinking systematically about relationship building rather than leaving it to chance. Most people hope to stumble into valuable relationships. Winners engineer them deliberately. Chapter 23. The Financial Battlefield. Money as Strategic Weapon. Sun Tzu emphasized resource allocation as the foundation of strategic advantage. Money isn't just a tool for buying things. It's a weapon for creating options and eliminating obstacles. The wealthy think about money differently than average people. They see it as ammunition that should be deployed strategically rather than spent on consumption. Every dollar spent on consumption is a dollar that can't be invested in capability building or opportunity creation. This requires developing what Warren Buffett calls business owner mentality, even if you're an employee. Think about your career as a business and your skills as products. Invest in capabilities that increase your earning power rather than things that provide temporary pleasure. Build multiple income streams that complement rather than compete with each other. The wealthy rarely depend on single sources of income because they understand that diversification provides both security and opportunity. Most importantly, develop the discipline to live below your means regardless of your income level. This creates capital that can be deployed when opportunities arise. The wealthy understand that opportunity is worthless without the resources to capitalize on it. Chapter 24. The Time Battlefield, Temporal Advantage. Sun Tzu taught that timing determines victory as much as strategy. Rapidity is the essence of war. In the modern world, time is often more valuable than money because it's the one resource that can't be replaced or recovered. The wealthy have fundamentally different relationships with time than average people. They don't trade time for money directly. Instead, they invest time in building systems and capabilities that generate money without their direct involvement. This requires distinguishing between activities that consume time and activities that invest time. Consuming activities provide immediate results but don't build future capabilities. Investing activities might not provide immediate returns but create compound advantages over time. Learn to value your time at your target hourly rate, not your current one. If you want to earn $500 per hour eventually, start making decisions as if your time is already worth $500 per hour. This forces you to eliminate low-value activities and focus on high-leverage opportunities. The key is building systems that leverage your time rather than just spending it. Most people work in their business rather than on their business. Winners create processes, relationships, and assets that work for them even when they're not working. Chapter 25. The Psychology of Wealth, Mental Models of Winners. Sun Tzu understood that warfare is fundamentally psychological. The same is true for wealth creation. Your relationship with money, success, and competition determines your results more than your technical knowledge or natural abilities. The wealthy have different mental models about how the world works. They see abundance where others see scarcity. They see opportunity where others see problems. They see systems where others see random events. These mental models aren't just positive thinking. They're based on different assumptions about how value is created and distributed. The wealthy understand that wealth isn't zero-sum. Creating value for others is the most reliable path to creating value for yourself. This requires changing your relationship with failure and setbacks. The wealthy see failures as education and setbacks as information. They extract lessons from negative experiences and use that intelligence to make better decisions in the future. Most people have psychological blocks around money and success that prevent them from achieving their potential. They feel guilty about wanting wealth or believe that money corrupts people. These beliefs create self-sabotage patterns that ensure mediocre results. Chapter 26. The Technology Force Multiplier, Digital Age Advantages. Sun Tzu couldn't have anticipated the internet, but his principles apply perfectly to digital age warfare. Technology creates unprecedented opportunities for force multiplication and competitive advantage. The wealthy understand that technology isn't just about efficiency, it's about capability extension. They use technology to do things that would be impossible without it, not just to do existing things faster. This requires staying ahead of technological curves rather than following them. By the time technologies become mainstream, the competitive advantages have usually been captured by early adopters. Study how successful people in your field use technology differently than average practitioners. What tools do they use that others ignore? What systems do they build that others avoid? What capabilities do they develop that others find too complicated? The key is focusing on technologies that provide sustainable competitive advantages rather than temporary conveniences. Most people use technology to make their current approaches more efficient. Winners use technology to make fundamentally better approaches possible. Chapter 27. The Succession Strategy, Building Beyond Yourself. Sun Tzu's ultimate teaching is that the greatest victories create lasting advantage that extends beyond individual battles. In modern terms, this means building wealth and influence that compound across generations. The truly wealthy don't just accumulate resources for themselves. They create systems, institutions, and legacies that continue generating value long after they're gone. This requires thinking beyond personal success to systemic impact. Study how the greatest fortunes in history were built and preserved. They weren't created by individuals working alone. They were created by people who built organizations, developed other people, and created value-generating systems that could operate independently. This succession mindset changes how you approach current opportunities. Instead of just maximizing short-term returns, you consider how today's decisions will compound over decades. You invest in relationships, capabilities, and assets that become more valuable over time. The key is understanding that your greatest competitive advantage might be your ability to develop other people's potential. When you make others successful, you create loyalty and capabilities that extend your influence far beyond what you could achieve alone. Chapter 28. The Global Battlefield, International Opportunities. Sun Tzu understood that the greatest strategists think beyond local conflicts to global opportunities. In today's interconnected world, the wealthy don't limit themselves to domestic markets or opportunities. They think globally from the beginning. Consider how the Walton family built Walmart's international empire. They didn't just dominate American retail and stop there. They systematically expanded into markets where their operational advantages could be replicated and where local competitors lacked their scale and systems. This global thinking applies to individual wealth building too. The most successful people today develop skills, relationships, and investments that can generate value across multiple countries and currencies. They understand that economic opportunities are unevenly distributed around the world, and positioning yourself to capture global opportunities creates exponential advantages. Ray Dalio built Bridgewater Associates by understanding global economic cycles better than competitors who focused only on domestic markets. His investment principles work across different countries and economic systems because they're based on universal human behaviors and economic patterns. The key is developing what economists call comparative advantage on a global scale. Instead of trying to be good at everything locally, focus on becoming world-class at something specific that can be scaled internationally. Most people limit their thinking to their immediate geographic area. They compete locally instead of thinking globally. This constrains their opportunities and forces them to compete in potentially oversaturated local markets. Chapter 29. The Innovation Battlefield, Creating New Games. Sun Tzu's most advanced teaching is that the greatest victories come from making traditional battles irrelevant. Instead of fighting existing wars better, the ultimate strategy is creating entirely new types of conflicts where you have insurmountable advantages. Steve Jobs mastered this principle repeatedly. When the music industry was fighting piracy through lawsuits and digital rights management, Jobs created iTunes and made purchasing music more convenient than stealing it. When phone manufacturers were competing on technical specifications, Jobs created the iPhone and made the comparison irrelevant. This innovation thinking applies beyond technology. The wealthiest people often create new market categories rather than competing in existing ones. They identify unmet needs or inefficient systems and build entirely new solutions. Howard Schultz didn't compete with existing coffee shops by making better coffee or charging lower prices. He created the concept of coffee as a social experience and built Starbucks around that insight. This allowed him to charge premium prices while expanding the entire market. The key is identifying assumptions that everyone in an industry accepts, but that might not actually be necessary. Often the biggest opportunities come from questioning fundamental assumptions about how things have to work. Most people accept existing market structures and try to compete within established rules. Winners often succeed by changing the rules entirely or creating new games where traditional competitors can't follow. Chapter 30. The Persistence Paradox, When to Hold and When to Fold. One of Sun Tzu's most nuanced teachings is understanding when persistence becomes stubbornness and when flexibility becomes weakness. This balance separates long-term winners from people who burn out or give up too easily. Warren Buffett demonstrates this principle perfectly. He holds some investments for decades, ignoring short-term volatility and market criticism. But he also abandons investments quickly when fundamental conditions change. The key is distinguishing between temporary obstacles and permanent disadvantages. Jeff Bezos showed similar judgment with Amazon. He persisted through years of losses and criticism while building the company's infrastructure. But he also quickly abandoned initiatives like the Fire Phone when they weren't working. This combination of strategic persistence and tactical flexibility allowed Amazon to dominate multiple industries. The framework for making these decisions requires clear criteria established in advance. Successful people define their core principles and stick to them religiously, but they remain flexible about tactics and implementation methods. This requires developing what psychologists call grit, the ability to persist through difficulties while maintaining the judgment to recognize when persistence becomes counterproductive. Most people either give up too easily when facing temporary setbacks or persist too long with strategies that aren't working fundamentally. They lack the frameworks to distinguish between situations requiring different responses. Chapter 31. The Compound Relationship Effect, Network Multiplication. Sun Tzu taught that the greatest advantages come from systems where individual elements reinforce each other. In modern networking terms, this means building relationships that strengthen each other rather than just connecting you to isolated individuals. The most successful people don't just collect contacts. They create relationship ecosystems where introducing people to each other creates value for everyone involved. This makes them central to valuable networks rather than peripheral to them. Look at how Oprah built her influence. She didn't just interview celebrities and experts. She created a platform where appearing on her show connected guests to her entire audience and to each other. This made her show more valuable to guests than just the immediate exposure. Reid Hoffman, founder of LinkedIn, exemplifies this principle. He doesn't just maintain relationships with successful people. He actively connects people in his network to each other when it serves their mutual interests. This makes him indispensable to his entire network. The key is thinking about relationship building as ecosystem development rather than just contact collection. When you help people in your network succeed by connecting them to each other, you become more valuable to everyone involved. Most people think about networking in linear terms. What can this person do for me? Winners think in network terms. How can I create value for multiple people simultaneously while positioning myself as a crucial connector? Chapter 32. The Wealth Mindset, Internal Programming for External Success. Sun Tzu understood that external victory requires internal preparation. Your beliefs about money, success, and your own capabilities determine your results more than your circumstances or opportunities. The wealthy have fundamentally different programming about how the world works. They believe that value creation is rewarded, that problems are opportunities, and that their actions determine their results. These beliefs create behavior patterns that generate wealth consistently. This isn't just positive thinking. It's about developing accurate mental models about how value is created and distributed in the economy. The wealthy understand that money flows towards solutions and away from problems. Most people have been programmed to think like employees rather than owners. They focus on time-based compensation rather than value-based rewards. They think about avoiding losses rather than creating gains. They see money as scarce rather than abundant. Changing these mental programs requires consistent exposure to different examples and different thinking patterns. This is why the wealthy often join mastermind groups, hire coaches, and associate with other successful people. They're reprogramming their internal software. The key is recognizing that your current financial results are perfect reflections of your current mental programming. If you want different results, you need different programming. Your commitment level. If you've made it this far, you're in the top 1% of people who actually consume this type of content completely. Comment strategist below and tell me which of these principles resonated most with you. The final section is going to give you your specific action plan, but I need to know you're serious about implementation, not just information consumption. Chapter 33. The 90-Day Implementation Plan, Your Strategic Launch. Understanding principles without implementation is worthless. Sun Tzu emphasized that the general who wins a battle makes many calculations in his temple before the battle is fought. Your temple is the next 90 days, and your calculations are the specific actions you'll take to implement these strategies. Week 1 to 2. Complete your strategic assessment. Create a written analysis of your current position, including your strengths, weaknesses, resources, and constraints. Most people skip this step because it requires honest self-evaluation, but you cannot develop winning strategies without accurate intelligence about your starting position. Week 3 to 4. Design your intelligence network. Identify the 5 most successful people in your field, and begin systematic study of their strategies, decision-making patterns, and resource allocation. This isn't casual observation. This is intelligence gathering with specific objectives. Week 5 to 8. Build your foundational systems. Create decision-making frameworks, daily routines, and accountability structures that will support long-term strategic thinking. The wealthy don't rely on motivation. They rely on systems that make strategic behavior automatic. Week 9 to 12. Launch your first strategic initiative. Choose one area where you can apply Sun Tzu's principles immediately and begin implementation. This might be a new business venture, an investment strategy, or a career advancement plan. The key is treating this as warfare preparation, not casual self-improvement. Your competition isn't taking 90 days to prepare. They're already implementing strategies while you're still consuming information. Chapter 34. The Resource Mobilization Strategy. Assembling your arsenal. Sun Tzu taught that victory goes to whoever can assemble and deploy superior resources at the decisive moment. This doesn't mean having the most resources overall. It means having the right resources available when opportunities arise. Start by auditing your current resources across 5 categories: financial capital, human capital, social capital, knowledge capital, and time capital. Most people focus only on financial resources and wonder why they can't compete with others who have superior resources in other categories. Financial capital is obvious, money available for investment and opportunity capture. But human capital, your skills, capabilities, and personal brand, often matters more. Social capital, your relationships and network connections, can provide access to opportunities that money alone cannot buy. Knowledge capital, your understanding of markets, trends, and systems, creates advantages that persist across different economic conditions. Time capital, your ability to focus extended effort on high-value activities, often determines whether you can execute on opportunities others identify but cannot pursue. The strategic principle is building resources that complement and reinforce each other. The wealthy don't just accumulate money. They build integrated capability portfolios that create multiple paths to success. Most people focus on single resource categories and wonder why their growth plateaus. Winners build balanced resource portfolios that create exponential rather than linear advantages. Chapter 35. The Execution Excellence Framework. From Strategy to Results. Sun Tzu's principles are worthless without flawless execution. The difference between people who understand strategy and people who win consistently is their implementation capabilities. Execution excellence requires 3 elements: clear objectives, systematic processes, and consistent accountability. Most people fail at execution because they're unclear about their actual objectives, inconsistent in their processes, or lacking in accountability mechanisms. Clear objectives mean specific, measurable outcomes with defined time frames. I want to be wealthy is not an objective, it's a wish. I will increase my net worth by $100,000 within 12 months through a combination of income growth and investment returns is an objective that can be strategically pursued. Systematic processes mean documented, repeatable methods for achieving your objectives. The wealthy don't rely on inspiration or motivation. They follow proven processes consistently regardless of how they feel. Consistent accountability means regular measurement and adjustment of your strategies based on actual results. Most people avoid measurement because it reveals gaps between their intentions and their actions. The key is treating execution like a skill that can be developed rather than a personality trait you either have or don't have. Winners build execution capabilities systematically. Chapter 36. The Wealth Acceleration Timeline. Your Path to Financial Victory. Sun Tzu taught that understanding timing is crucial to strategic success. Wealth building follows predictable patterns, and understanding these patterns allows you to accelerate your progress by focusing on the right activities at the right stages. Years 1 to 2. Foundation building. This phase focuses on developing earning capability, building initial capital, and creating systems for consistent wealth-building behaviors. Most people want to skip this phase and jump directly to investing or business building, but without solid foundations, later strategies collapse. Years 3 to 5. Opportunity creation. This phase focuses on building businesses, making strategic investments, and developing multiple income streams. Your foundation from the first phase provides the stability to take calculated risks and pursue higher return opportunities. Years 6 to 10, scale and systematization. This phase focuses on building systems that generate wealth without your direct involvement, developing other people who can extend your capabilities, and creating lasting competitive advantages. Years 10 plus, legacy and impact. This phase focuses on building wealth that compounds across generations and creating value that extends beyond personal financial gain. The key is understanding that each phase requires different strategies and different resource allocation. Tactics that work in the foundation phase can actually be counterproductive in later phases. Most people either never complete the foundation phase properly or try to apply early phase tactics throughout their entire wealth-building journey. Chapter 37. The Modern Warfare Applications, Digital Age Domination. Sun Tzu couldn't have imagined the internet, but his principles apply perfectly to digital age opportunities. The most successful people today are those who apply ancient strategic wisdom to modern technological capabilities. The internet has created unprecedented opportunities for force multiplication. A single person with the right knowledge and systems can now reach millions of people and generate income streams that were impossible in previous generations. But digital opportunities also create new types of competition and new requirements for success. The barriers to entry are lower, which means more competition. The pace of change is faster, which means strategies become obsolete quickly. The strategic principles remain the same: superior intelligence, better positioning, faster execution, and systematic advantage building. But the tactical applications require understanding digital platforms, online marketing, and technology-enabled business models. Study how the most successful digital entrepreneurs apply Sun Tzu's principles. They don't just use technology as a tool, they use it as a strategic weapon to create sustainable competitive advantages. The key is understanding that digital success still requires the same strategic fundamentals that have always determined success, but applied through new channels and methods. Chapter 38. The Psychology of Sustained Success, Mental Models for Long-Term Victory. Sun Tzu understood that the greatest challenge isn't winning initial battles, but maintaining strategic advantage over time. This requires psychological frameworks that prevent success from creating complacency or failure. The wealthy develop different relationships with both success and failure than average people. They see success as validation of their processes rather than evidence of their superiority. They see failure as information about their strategies rather than judgments about their worth. This psychological framework prevents the boom and bust cycles that destroy many people who achieve temporary success. It also prevents the learned helplessness that keeps people trapped in mediocrity after experiencing setbacks. The key insights are that success is a process, not an event, and that maintaining success requires different capabilities than achieving initial success. Many people who build wealth quickly lose it because they don't develop the psychological frameworks necessary for long-term wealth preservation. Study the mental models of people who have maintained success across multiple decades and different economic cycles. They think differently about risk, opportunity, and their own capabilities than people whose success is temporary. The strategic principle is building psychological capabilities that compound rather than deteriorate over time. Sun Tzu's final teaching is that knowledge without action is worthless, but action without strategy is dangerous. You now have the strategic framework used by the most successful people throughout history. The question is whether you'll actually implement it or just add it to your collection of information you've consumed but never used. Here's your specific challenge. Choose one principle from this presentation and implement it completely within the next 30 days. Don't try to implement everything at once. That's a strategic error that leads to mediocre execution across multiple fronts instead of excellent execution in one area. Document your implementation process and measure your results. The wealthy are obsessive about measurement because you cannot improve what you don't measure accurately. Most people will watch this video, feel motivated for a few days, and then return to their previous patterns without implementing anything systematically. They'll consume more information instead of acting on the information they already have. Winners will choose one principle, implement it thoroughly, measure the results, and then systematically expand their implementation across other areas of their strategy. The difference between these two responses will determine whether this information changes your life or just entertains you temporarily. Sun Tzu taught that every battle is won or lost before it's fought. Your battle for financial success and personal power will be won or lost based on the decision you make right now. Will you treat this information as entertainment to be consumed or as intelligence to be implemented? Will you join the 99% of people who collect information but never act on it, or the 1% who turn knowledge into systematic competitive advantage? The strategies in this presentation have created more wealth and power throughout history than any other system of thought. They work. The question is whether you'll work them. Comment, warrior, if you're committed to implementation rather than just information consumption. Tell me which principle you're going to implement first and how you're going to measure your results. Your strategic advantage starts now. The question is whether you'll use it or waste it. Remember, in warfare, as in wealth building, there are no participation trophies. There are only winners and everyone else. Sun Tzu gave you the blueprint for victory. What you do with it determines everything. The Art of War isn't just a book. It's a strategic system for dominating any competitive arena. Apply it systematically, measure your results obsessively, and adjust your tactics based on